All right, the great summer rotation is heating up, just like the temperatures, just like the volatility in the market. I'm going to go through three slides here in a couple minutes. They kind of give you a little bit moment of the big picture because we have a lot going on. Since mid-July highs, you've seen the Nasdaq pull back roughly 7%. S&P is down roughly 4%, but the Russell 2000, which is your index of small cap stocks, is up 11. What's going on? Is AI finally taking that breather? Is it just rebalancing? Or are we going to be small cap trying to close the gap in performance? I mean, you'll see some of those numbers here over the last 10, 15 years in a later slide. But we do have a presidential election. We can't get away from it. Who the VP is going to be, debates, the whole nine yards. Tune in next week or next day for what might happen next with all of it, right? It just seems still to be a little bit crazy. And people don't like crazy. They don't like uncertainty. And maybe that's some of the volatility. You also are seeing a lot of geopolitical risk, especially in the Middle East, which seems to never go away, but it's pretty loud and pretty forefront right now at the moment. So that's a negative. The positive, GDP growth still plugging along. Corporate earnings still strong and growing. And the consumer is still resilient. People are still spending money. Apparently, I'm not the only one that has the Amazon fairy showing up their house 3 times a day. So we're going to go through 3 things here. Look at the big picture. Take a deep breath, pour your favorite drink, buckle up, and let's get started. All right, first slide here showing annualized performance between the S&P 500, which is in Olympic gold, and the Russell 2000, which is in red. This is showing the annualized performance. So all the way through since 2015, there's roughly a 4% spread annually. That's a very big gap. Now, if you do look back 2020, 2021, those COVID years, small cap closed that gap, kind of reverted back to the mean you might hear people talk about. They got back to average. The performance was very similar, right? If you see those charts, that's where they touch. Right now, the AI boom has really made S&P 500 king. NASDAQ, S&P 500, the large names have been absolutely crushing it. But what happened during the COVID time? We had cheap money and we had domestic growth. Where do we think we're coming here? We have domestic growth, GDP is up, and the potential Fed rate hikes. Now, only time will tell if this is going to be another chance for small cap to really shine and possibly take the crown away from large cap. But it's worthwhile to just remind you, never know when it's going to turn on a dime, right? In the last 2 weeks, it's almost 11%. That is a big number very quickly. This is a nice reminder. I know you've heard me say it 100 times. Stay diversified across your asset classes. You can't just chase the one winner. So it'll be interesting. We'll check this in a year or even 6 months from now to see if small cap rally is here to stay or is it just a little summer fling. All right, next up, we got this chart is showing the GDP over the last 6 quarters. Our most recent quarter, Q2 2024, up 2.8%. Considering we were all supposed to be in a recession right now, positive GDP numbers are a great thing. Now, there are certain areas that are cooling. You'll see net exports are down, but the personal consumption and private business investments, so personal consumption, you and I spending, business, the private investment, those are business spending, are both up. Business are spending, they're hiring. You and I are spending out there. These are good things to stay positive on to kind of tune out this noise. But the economy works, strong jobs, we're starting to get back to somewhat normal, and normal is a good thing. All right, last but not least, we got this chart showing the last couple of decades of the S&P 500 total return as well as their max drawdown in the year. Let's go back to COVID, down 34 in March, but the year finished up 18. Markets are resilient. It's really easy to overreact, but here's a nice little reminder to stay invested, right? Stick to your plan. Now, if you don't have a plan, that's where I come in. It's a lot easier to tune out the news, your neighbor. When you have a plan, you have a blueprint of how you're going to hit your goal. So reach out, comment below, shoot me an email. Let's get you a plan if you don't already have one. And if you need to update it, I'm still here for that too. Hopefully you enjoyed these insights. Look forward to doing it again soon and have a great day.